welcome back to another edition of Outdoor Hospitality Weekly. I'm Alex Burkett, joined as always by my co-host, Matt Whittemore. And today we're joined by Jesse Baker, founder and CEO of Jet Hospitality, a company that's redefining what outdoor lodging can look like. Since launching in 2017, Jet has built a portfolio of resorts, hotels, glamping sites, campgrounds all across the Pacific, Northwest, and Mountain West. Jesse, thank you so much for joining us.
Gentlemen, pleasure to be here. Thanks for having me.
So, Jesse, I gave a kind of short introduction there, but for anybody who's unfamiliar with just you and the brand, can you kind of take us through maybe a really quick history of what that was like starting in 2017 up to where you guys are at today?
Yeah, right on. Yeah, really two phases of the company. Take you down memory lane here. 2017, 18, 19, into 2020, right as COVID approached, we were more of a vacation rental and social experience company, if you will, here based out of Seattle. And we accumulated roughly about 10 units or so in a 40-foot yacht. So we started as a company that would try to take people out on our 1959 Stevens. We rented the yacht out too, and there's a few stories about turning that, what we found. So we knew the business model worked. Anyway, fast forward and COVID hits into 2020. I was flipping houses and knocking out appraisals on the side there, learning this business, and I put my first property under contract, Pacific Dunes Resort, in 2019, and we closed that property January of 2020, really as everything hit, sold the vacation rentals and made that pivot, if you guys will, in 2020 there towards the current business model, which is, to become the leader in lifestyle lodging and the North American, powerhouse company in the outdoor and leisure travel market. So, that's a little bit more of a, I guess, it's a long-winded version of two companies, but I think we have a clear vision now.
Love it. And so you went to school for hospitality, right? So I'm curious to hear if, was this vision always there? Was lifestyle and outdoor hospitality always part of the vision?
It kind of evolved. Aaron and myself, we started the company Jet. Really, we were dorm room guys, football players, hotel school, in there talking about this pipe dream the whole time. So first it was student rentals. That's kind of where our background was with student housing, and then it got into vacation rentals and then into outdoor. And I think it's really about just kind of understanding the trends in the times. Outdoor now going to experiential and to roadside boutique, and kind of just forecasting where the business is going to be before you're there. So we're ever evolving that.
And Jesse, you mentioned some kind of terms in the opening there, obviously with this, what I think you've mentioned, kind of a hedgehog investment model, taking a distressed, underperforming asset, converting it into this like lifestyle lodging concept, just like what does that mean? And I guess how do you define that as far as it's kind of a unique investment model in way that you guys approach it, but obviously you've been really successful with that so far.
Yeah. Thanks, Alex. I think it is a successful model. Our hedgehog model is to basically, buy something distressed or buying low, so you're making your money on the buy. You're signing that paper and you're getting equity as is. Then you got to really take the value add and have the capital to do it. And I think that's kind of the difference maker for people who do one property or two or 10. You got to have the capital to back up your rehab. And then, we're rebranding, we're reopening these things as a boutique investment property, but with an alternative lodging or outdoor element. Kind of the same model around national parks within 2 hours of the demand center, probably with some kind of fishing and hunting and other rec to carry it in the shoulder seasons. So pretty good formula there. And, you're stabilizing this asset over a year or two, having it reappraised. And I like to say that we know where the asset should be before we buy it in 2 years. So you're basically appraising the before and after and deducting your construction cost. And then, that's your value that you're adding. So you got to decide if you're looking to sell that or if you're looking to refi that, and then understand on the refi what the loan to value is going to be. So you're going to have to leave quite a bit of collateral in there if it even makes sense. And so I think we went the refi approach, and our first 5 deals we did cash out refis and delivered returns for our partners, and kind of reinvested them into the next 4 deals, soon to be 5. So kind of made the leap, but there's a time and place to raise capital too, and we're also at that juncture right now as the market heats up, and really it's a race to the top, if you will, in my opinion.
Love it. So I want to you brought up an interesting point there, which you've got some exciting stuff going on at Jet. So I want to dive into that, but first I kind of want to put a bow on the hedgehog model,
Yeah.
because you're actually the one that turned me on to this. I had heard of the book, right? This comes from the name of the book is what? Good to Great.
Yes. Good to Great,
It's
the old
Jim.
one, Jim Collins.
Yep. So I'd never read the book. I've heard of it. So when I first heard this, term hedgehog investment model from you, I looked into it, and it makes so much sense, right? Because especially for the hospitality and the lifestyle hospitality and the outdoor hospitality space, right? There's kind of 3 drivers here. There's right, finding something that you're deeply passionate about. There's finding something that you can be the best in the world at, and it's something that also drives an economic engine. And I think you've honestly really nailed it there, because you have a really cool concept. It's clear that, right, you wake up every day and it's building Jet Hospitality and giving people an awesome place to go get away from the monotony of day-to-day life. You're growing a hell of a portfolio, and right, having had the opportunity to dive into your numbers a little bit and look at where you're taking this thing, it all makes financial sense, and it makes sense. There's good ROI, there's good growth, there's great revenue, it's profitable businesses. So, just wanted to kind of put a bow on that it seems like you've covered all those bases. Do you feel like you have? You've been in the thick of it. I would assume you're not really taking much time to like step back and look at what you've accomplished. But does it feel like you're doing all that?
Yeah, that's a good question, Matt, and appreciate you laying that out there. You kind of said something that was catchy for me, which was, yeah, I get to wake up every day and build this thing. It is very exciting to do, and to see it executed on paper. Financially, this last year was the big year for us on the human side. We've hired quite a few layers of good leaders, and you invest in that payroll, and you uh, make changes as an organization to evolve. Really, we were a real estate company first, and I think we've done that. That's where you're talking about making the money on the buy, the economic value. Then developing a brand and an operating company. Uh, I got out of the people business for a while, but certainly back in it with the team we have and the leaders, and we range from 25 to 50 people employed at any time across the portfolio. So that's something that I'm real proud of. And taking care of people, and we like to say lifestyle lodging, and that applies to our staff as well as our guests, obviously. But when they step out of their door at Teton Peaks Resort, they're living there. The innkeepers live at that property, and we like to provide that lifestyle. It's tough for them sometimes to get away because they take such an ownership mentality. But I think we've hit the trifecta as far as proving our financials. Like you were saying, it's pretty well given with our track record. The next phase isn't proven yet of where we're taking this thing in terms of the soft branding ideas and the Westerner collection. We've crossed over and done this boutique roadside model about 2 years ahead of everyone else as well. And I think I like our trends. I like where we're going, and the feedback we've received both on the outdoor side, but also in the greater hotel space. Some of these conferences where I'm sitting in the room rubbing elbows with the C-suite guys at every one of these companies, and they're saying you're onto something. So that feels pretty good.
That's awesome. Yeah, and I think that you nailed it with talking about the real estate business versus the people business. And I think the hedgehog model applies particularly well to hospitality because it's first and foremost a people business. And I think these are really important lessons. We come across real estate people all the time. I'm a former, real estate financial analyst and worked in commercial mortgages, and right, the spreadsheet cannot be what drives building a hospitality company or portfolio or even a single asset, right? You need to have a excuse me, you need to have a philosophy of hospitality, which is always people first. It's your team, it's your guests, it's the community, and right, the if you do all those things right, you have to trust that the spreadsheet will follow. So I think that's really awesome, and I think that kind of probably sums up our one big thing. This will be in the newsletter. Probably the newsletter will come out first, but I think that's a really good takeaway for the readers and the listeners. I would love to dive into right what the future plans are. You've got a lot of stuff cooking. I'd love to touch on right the concept of outdoor hospitality. You're in outdoor hospitality, but that's not all you do. I think there's a ambiguous kind of definition to what that is anyway, and I think it's an important idea to discuss because when I think about what you're doing and what I've been involved in the past, right? The world of true just campgrounds and RV parks,
Yes.
right? It's all about scale, 150 sites, 200 plus sites, because your average RV site probably makes $7,000 annual revenue. And it's become a very crowded space. It's largely consolidated. There's only so many 200 site RV parks and campgrounds out there. And that's
Yes.
right. I always have this inner struggle of like, is the opportunity still there to even try to continue to consolidate large RV parks and campgrounds? And then I see what you're doing, and there's a lot more roadside boutique hotels and motels and glamping properties and like all the things that you're doing. You don't need 200 units. You don't need 150 units. You don't even need 50 units a lot of times, right? Even a basic motel room before you run your process on it and transform it into that boutique experience, it probably already makes 3 to 4 times the revenue of an RV site. And that's what I always come back to, and why I think you really are onto something. Not that I'm qualified to say that, but that's what I come back to, right? So I think you've cast a net in a really interesting area and niche that I think has a ton of runway. I think some people are catching on to it, but I see you as sort of a pioneer in this space of what is traditionally overlooked and undervalued assets, and open for a lot of creativity. So I guess, I don't know if there's a question in there, but let's add one is, you use the term lifestyle hospitality. Do you consider yourself in outdoor hospitality? You've got an interesting mix of RV sites and glamping sites and motel rooms and hotels. And, is there another way to classify it beyond lifestyle hospitality?
Yeah, well, it's experiential, I guess, is the big buzzword too. I think first of all, thank you for the kind words about the boutique segment. I think we are onto something there, but I would say we're definitely in the outdoor uh, segment, and I use the word lifestyle because it's all inclusive of all travelers for us. It could be the workforce housing segment that's underserved, and we have a mix of that, especially in our off season, where you're talking about traveling nurses as contractors, or dudes that are building homes, couples that come in and want to build a home in the Teton Valley and stay for 3 months through the winter in a tiny home. And so we're certainly I think we're about 35% RV in terms of number of keys. We have a mix of glamping, cabins, tinies, tents, trailers, you name it. We've got it at every property, and that's kind of our forte too, is a competitive model to have all the unit types. So we're definitely not out of outdoor. But as far as the boutique concept goes, these are low entry point assets that you get to have the same form of unique creativity and transforming as you would in outdoor property. Maybe a little less of a lot size, but you certainly get to do the rooms. And we're buying them still in strategic locations. In Thermopolis, hot spring capital of Wyoming, Powell is right next to Cody on the way to Yellowstone. Uh, Medicine Bow is at a strategic location in the middle of Wyoming between Casper and Laramie Crossroads. And there's a massive energy pipeline of windmills being put up over 3 years. So there's strategy in every one of these buys, but I don't think that we're pivoting away from the outdoor segment, if you will. It's just that we're kind of reinventing it as we go.
Love it.
Yeah, we're some trailblazing. Yeah, go ahead.
No, you're good. You touched on the creativity, and I would say that the diversification in just the keys and the set that you have. How do you think about that in terms of how you're maybe competing head to head with other corporate lifestyle brands, right? And this race to the top, as you mentioned, talking about the market, right? There's only so many distressed assets or even worthwhile properties looking at in great locations that are going to be really hard to replicate and duplicate. How do you just think about that and what you're trying to do, and really why maybe you've been successful taking that approach instead of that maybe traditional set that you might see in a Sun Outdoors or an ELS or somebody any one of these other big capital players that are kind of starting to dip their toe, or even heck Marriott launching the outdoor collection, right?
Yes.
And all of the lifestyle brands that fit in there. So how do you just see yourself amongst that mix?
That's another good question, Alex. I see us again in our own lane, and I'm very emboldened by both conversations in the industry outside and in my own just analysis, because we're playing in an asset class that nobody wants to be a part of. I mean, most of the hotel operators are trying to run away from these non-pop 10 to 30 key properties, and they're trying to get to the 40 to 60 range. You see that with people in the outdoor segment too, Trailborn and some of the other boutique players, but certainly they're going for larger number of keys, less locations, and high desirable, demand centers. Where we're just taking strategic buys, but we're buying assets that people don't want, and frankly, the owners are having a hard time exiting. We provide a successful kind of re-entry point to the normal world where you're tied to this asset for 20 years and you don't want to franchise. You're not getting the value that you want for it. You maybe don't have that good of financials, so because you're not really paying attention, so no bank's going to finance it, and so nobody's out there bird dogging and kind of playing in that lane yet. I'm sure people are picking up, and you see like on the front of Alaska's magazine, Route 66 hotels. That's a feature story from Chicago to LA. This gal just drove and stayed in these little boutique hotels. So the word's out there. But as of now, our ability and our formula to go back to that hedgehog approach, is unmatched as what we're doing right now. And I think we have the opportunity to kind of create a brand out of it, which is what we're trying to do here this next year. So I feel really good about it, Alex. It's a good question, but does it make me not as big a player in the outdoor space because we're diluting? I don't know. That's yet to be seen, but I'm not really as worried about that, to your point with the first question, Matt, because, that space is getting so diluted and combobulated with Marriott's entry and all the bigger players partnering. And, there's so much consolidation and mix-haps going in outdoor that's, I'd say, 5 years mature now. That we can kind of just, play in both lanes. We can be a hotel operator, but also an outdoor leader, especially with our footprint in the Rocky Mountain Northwest. So, I don't know. What do you guys think?
Awesome.
Haven't heard that.
It's
Do we get to play in both lanes, or are they going to kick us out
Yeah,
because
no,
we're,
for
by, we're
sure. For sure. Yeah, I think it's an interesting conversation about like what does outdoor hospitality mean? Like, right, we're going to the outdoor hospitality conference and expo next week. This will probably be released while we're at the conference or maybe shortly thereafter. And it's right, it's almost like a meaningless term, right? It's we our industry association, it used to be RVIC, which was RVs and campgrounds,
yeah.
but now it's OHI, which is the outdoor hospitality industry. But it's still predominantly RV parks and campgrounds, which is in my mind just a very small segment of what outdoor hospitality actually is. Like ski resorts are nothing new, right? I would consider ski resorts outdoor hospitality. It's to me, it's anything that's geared towards an outdoor experience.
Or the demand,
Anything
like
but.
the Super 8 in Driggs, Idaho is an outdoor hospitality property because it's one of only 4 properties there. So it gets a bad rap because has a franchise brand. But I
Sure,
think it has
right.
to be has to be expanded, and you have to look at how are you going to survive too. Like we're not necessarily going away from outdoor hospitality by accepting 20 to 30% of workforce housing in November through March, but there's no other business during there. So you got to make these properties float year round. And the way we're doing it differently is we don't hire seasonally. We're investing in careers for our innkeepers, and we're not laying people off right now. In fact, we're hiring to plan for next year. We want to train them over the winter. So I think that,
Love
yeah. So you tell them out there they need to expand the window, and but
it. Hey, come down to Louisville next week and tell them yourself.
yeah, I would. We're having our innkeeper summit next week, which is another cool talking point. It's not
Oh,
on our list
sweet.
here, but yeah, we're going out to Cottonwood Camp, and we'll have about 20 people from the company doing a training day on Vets Day, hosted by our Marine Sergeant Jacoby, and then Wednesday doing a float kind of a workshop and a fly fishing activity and big barbecue dinner. So it's gonna be cool if you want to come on down to
Amazing.
Fort Smith, Montana. We can
Nice.
get it down. So
I love it, man.
now we've
I
got a
love it.
guy out there though. Yeah. So what else, guys?
You brought up an interesting point I want to touch on is the staffing, right? The people aspect of this business,
Yes.
right? You're not buying huge resorts. I think what your average acquisition is under $1 million. Is that true?
They've ranged. I mean, Escalante was 2.9, but in the past they
Oh,
ranged
okay.
from about 500K to a million five, million eight.
Okay.
And we made a big splash with that one because it was a land development deal as a master use permit. But yeah,
Right. So yeah, I guess I'd love to hear quickly about kind of the staffing model because I would imagine a lot of just people would look at this model and say, well, it's going to be really hard to staff those properties because they're not at least not all of them are huge revenue
yeah. How do you
properties.
make a
So
profit off
tell us about
300K?
it.
It's hard. Yeah, and that goes back to the hedgehog model. It's an innkeeper model we've adopted, almost like it's the traditional model. The innkeeper out west took care of everything, tended bar, checked the guest in, did the maintenance, and that's just what we've brought back. I think we've combined that with really nice housing that separates them from the guests, and people need housing too. So we're a desirable employer where we may not have to pay as much, but the overall pay package with the housing and the housing and utilities alone is 25 grand per year.
Right.
And so just being able to ebb and flow with a single person operating versus a couple. A couple typically is going to take less, but then you have to they work kind of as like 1.5 employees instead of 2. But there's some
Right.
good couples out there. Don't get me wrong. That's how we do it. You got to run them lean, and we try to operate at about 20, no more than 25% labor at our properties, and we keep it into a real uh, tight expense model. And that goes back to my appraisal days. So actually, we're getting better
Love
though
it.
with Gus having joined the company. Having forecasted budgets and 5-year capex planning. It's a whole new world because I'm just a gunslinger, So it's nice actually, you know, applying some budgetary process.
Nice.
Yeah.
Yeah, I mean that's where I think there is probably a big parallel to the campground and RV park world. Is I think a lot of campground and RV park owners would tell you 25% payroll is way too high. Yeah, I think
Yeah,
a
they
lot
would.
of us are probably trying to stay under like 15%. And I think that's tough, right? It's kind of the X factor in the business, right? If you look at the Danny Meyer philosophy of, enlightened hospitality of you prioritize your staff, you have a happy staff, and then a happy staff creates happy guests, and then
Yes.
happy guests create happy shareholders. It's a conflicting thing of following that, but then also staying on budget. So
Well, and I'll give you an example of where we're changing the game, and also where I think it's a contrarian viewpoint as far as I gave our staff 3% commission for every dollar they touched from peak season this year, from March to September. So that included all walk-ins and all phone business. You know what? And I have those guests.
wow.
This is an innkeeper model. It's a salary-based model, but they have the decision when they pick up the phone. Or if a guest walks in and we tell them it's 145 and they say, no, I'm going to go down and check rates. They're like, well, what are you willing to pay? How about 120? If they make that fail, they should have a piece of that. And so just 3% alone of our revenue during peak season, I guess it came out to be about a third of that business is walk-in or phone. So on 100 grand, 300 grand property, 100 of it for the season, they're getting an extra 3 grand. Well, that might be a vacation or a used car for someone. So 3 to 5,000 as an incentive was one thing we rolled out per season. But you've got to. It's not so much about being within that labor model. That 15%, because we're considering most of them are hotel properties. Like I don't have any true RV or campgrounds, so you got to have 5% for labor for your repairs and maintenance usually alone. So this innkeeper couple, that goes to that. Your rooms expense on a hotel, you want between 20 and 25%. And so we don't need to get too granular with it, but that's pretty dang tight. If you keep it, if you're paying 60 grand on a 300 grand property and you're getting two people out of that, you can do the math as far as where minimum wage comes in and how the housing applies. And you've seen that model employed though with apartment owners, where you'll just have an on-site manager for 20 rooms or 20 apartments or less, and they have a little thing on their door that says for after hours, call this number, and that person gets free rent. But the apartment owner can't afford to pay a full-time manager. So
Right.
it's kind of merging that with the innkeeper model. That's a seminar in itself.
Yeah. Nice. Love it.
What
really
would you
wanna
say? Do people usually cut staff on the RV and campground? You just cut your seasonal staff at the end of the year and start fresh the next year. As far as staffing goes in the traditional model.
Yeah, it's work campers, seasonal work campers. I know
Yeah.
you guys hire work campers. I did see
We
that
do.
on the website. So that's a huge part. But yeah, it's right. Seasonal campgrounds, there's a constant anxiety among seasonal campground operators that, right, am I going to have to restaff this thing every single season? And that could
Yes.
be your general manager too, which a lot of time, especially with the smaller campgrounds, it really is the innkeeper model. And that's
Yeah.
the challenge, right? Is for like private equity to come in and take basically an innkeeper model campground. It's usually a couple, like you talked about. It's the husband and wife, and the wife, not to have a gender stereotype or whatever, but the wife usually runs the store, answers the phones, and then the husband is like Mr. Fix-It out there
Yep.
doing everything. And then you come in and you're like, I see a lot of real estate private equity groups like, oh, we'll just hire contractors. And I'm like, so you're going to pay an electrician $125 an hour or $200 an hour to come in here once a week and do minor electric fixes?
If you can get
That's
one.
all your margin.
Yeah.
Right, exactly.
And that's the greater conversation with Marriott. That people are especially in the hotel industry. It's like they're going to come in and try to marry off this thing. And I just was at a conference, NHIF over in Bellevue the other day, and the CEO of the management company that's going to be managing is their dub. And we hearing their feedback. I think multiple of the companies had bid on it, but they're traditional hotel operators that are going to try to run this outdoor space, and uh, it's going to be interesting to see what happens. Let's just say that. But it's certainly you can't have the same experience too then if you try to marry an outdoor versus that mom and pop, because you know what, that same guy, that old boy that's fixing everything, he'll get his guitar out and be playing the banjo by the fire later that night, pouring beers and stoking a log, and you're not going to get that from like a 9 to 5 Marriott employee, or
Right.
I don't know how it's going to merge, but I'm sure they'll figure it out. It's Bonvoy.
Right. I mean, exactly. It'll, people still go to Applebee's, right? People still
That's
go
right.
to, whatever. But
I think it's great for our
um,
industry personally.
yeah,
But
it creates opportunity 100%. It really does. I believe that. So I want to touch on, right? We've touched on a lot of things that translate to you and the rest of the Jet team creating a moat, or really several different kinds of moats around the business. I
yes,
think the biggest one that we haven't really touched on is, right, all of these ancillary non-room revenue, non-site revenue things that you're rolling out, which I think is going to be great for creating community among your guests and creating, I think, a huge hurdle for our industry is return guest profile. You have all these incredible concepts that are built for Instagram, and you go and you get your Instagram photo once and you never need to go back. And
right.
I think, right, your marketing cost is always going to be so high because, and I'm not saying you, I'm saying the industry, but marketing costs are going to be so high to constantly be getting new guests all the time. So I love what you've rolled out. We've discussed it a little bit, but
Yes.
tell us about, right, you've got the passport program, you've got loyalty, you've got experiences, food and beverage, event venues. Good. Let's hear it. I want to
Yeah.
hear you dive
Thank
into all of that.
Well, we call it it's our product department, and by the way, we haven't been very successful at all of those. We've rolled them out and we have them, but we're going on V.2 for some of them, version 2, getting better and learning as we do it. So, experiences, the industry kind of pivoted towards that a couple of years ago, where we want to be able to offer that river float to see that moose from 3 to 5, in the Teton Valley, that I've gone on 3 times and seen the moose 2 out of 3 times. I want to be able to recommend that and sell that to the guest, maybe make a margin. Um, I think that in having done that for a year or two, there's interest, but it's not a huge income stream, because there's other companies that do that and that's all they do. I think the passport concept is excellent and gives us a competitive edge because we grouped, really the road trip, uh, and compiled an awesome, call it 10-day experience where you can give the gift of adventure, and you're able to hand that physically to someone, which is different than just giving them a gift certificate or, um, whatever, something digital. I think where we've learned on that one too, though, is we had a lot of success hitting it in terms of charity, in terms of auctions, people paying the value for it, but not as much success in our lobbies or online selling that, because it's difficult for people right now financially to just buy 10 or 20 or 30 days in advance. Like, so I think we're going to move towards a little bit different model there to create more of the community and a lower entry point, like you talked about there, Matt, but certainly an awesome concept. What we're
Yeah.
moving to, we're also rolling out these planned trips, kind of the Sierra Club model. But I sat next to a doctor on the plane, and she goes, "Hey, if you just put together a 7-day itinerary with my stops and everything in for 10 grand, like, we're gonna pay for it." So moving into the concierge planned trips segment, And then, yeah, loyalty and rewards. We're at like 40, 50,000 here by the end of the year of our own guests. And you hit on the economic cost of a guest. And I think that's important for operators to, especially on the RV and campground side where your margins are much lower. But I'm paying 15 to 18%, on a third parties to get a customer. And I'll give that credit to our COO, Gus Grimm. He said, hey, you got to think of this as the cost of the customer to get them in the network the first time, an acquisition fee. And it's our job to keep them within our network. It's easier for us because we have multiple locations and a big map in the lobby and they can just pick it. I think that's probably a big challenge for independent operators that they're going to see, to kind of your earlier point versus the kind of corporate outfits is how do they keep up pace with marketing and getting the guests to keep coming to their properties as there's more and more people entering in the segment or consolidation. To your point, if they have that one Instagram model, is that going to continue to drive the demand every year? Or is that going to dry up? I don't know. We've had success like at the Dunes, the demand's steady because it's Seattle Metro and there's millions of people. But the proportion of return customers is probably like, in the 1%, 1 to 2%. You're recycling new customers every year. So it's an interesting concept to look at. Did that answer your question about product? The five different things. Yeah. I think we've got to continue to reinvent ourselves for these customers, and you want to have something that you can sell and give away as a gift. And that's kind of what we've been trying to do is, on the investment side, something you can look, feel, and touch. On the guest and the product side, something they can look, feel, and touch and give to someone is the idea with all of this.
I wanted to ask Jesse just about the brand a little bit. Obviously, I have a marketing background and I'm a manager and an operator of these parks, and this has been a big focus for us selfishly heading into the off season. It looks like you've made a really conscious decision with all of the properties that are in the portfolio now to keep them and retain them with the brand of the resort or the park or what have you, instead of what some of the other portfolios have done, where it's brand name, city name, right? And kind of rolling everything up to that main brand. So one, was that a conscious decision? And is that something that you guys are looking at moving forward to kind of make Jet the brand of all of these parks? And then from a location standpoint, obviously primarily being based in, the Pacific Northwest and then kind of branching down in the West, are there other locations or cities that are kind of on the map as far as locations where you guys are really trying to carve your stake at? It's kind of a question of like, what's next? If you can give me a future crystal ball for the locations and the brand.
Yeah. Well, let me hit your first part first there, Alex. We consciously branded the properties individually before Jet became a brand. Remember, we were a real estate company first. I think all of them have great followings and keywords that are searchable for what people are doing in those markets. I think that people aren't necessarily searching Jet Hospitality Tetons like they would be under Canvas Yellowstone. So I think that's a good point. As we've evolved, we've had that decision: should we brand those parks as their own type of name, like a legacy resort type park? We certainly have the motor-in concept for our boutique properties, and kind of the tier level mapped out on the lodging side, but that's yet to be determined. I think our soft brand and kind of the performance of this Westerner collection that we're rolling out bodes better for us than trying to rebrand those properties personally, because the idea is it's a Teton Peaks Resort by Jet Hospitality, just like it is by Marriott on the hotel side. That's the real brand. And so if you layer that into like a Westerner collection of all these networks of properties, I don't really see it as a disadvantage, just having the property individually branded versus, under Canvas Moab. I don't know. You're the marketing guy, but certainly coming up with something to define those resorts though versus the rest of our collection, I think becomes an pertinent question, because this whole initial question you guys asked me, are we still an outdoor company? That outdoor side needs its carve out. So we'll see. But maybe you peel a layer of the onion back.
Right.
So yes, I want you to,
What
you've
was the
got some
second
things
part
going
of
on.
that?
We've touched.
Yeah, what was the second part
Oh
of
yeah,
that? You
go
wanted
ahead.
to hear about the future.
Yeah, just as far as like, right, what locations are next? What comes next for
Yeah,
Jesse? What comes next for Jet Hospitality as we kind of start to put a cap on the conversation?
yeah, no, I think that's good. And I wanted to address that too. Sorry to cut you off, man. You better save your stinger for the last one. Uh, what's next? What's next is we're building out Wyoming, to create kind of this Westerner collection soft brand. And I think the brand managements and expanding our portfolio by the number of flags within that region will be a good option. As far as acquisitions, though, we're looking southwest still into New Mexico and down into Taos and over into uh, kind of the Flagstaff, Winslow, Route 66 corridor. I think that for us building into the south makes more sense because we have a lot of Rocky Mountain Northwest properties and it's cold too. We got to send our guests down south to other options. So it'd be nice to round out that portfolio. We're obviously going through this capital raise, and 20% or so is kind of dedicated to infill with our Escalante and our Cottonwood, Virginian, and a couple of those three properties that we have existing, and then the rest will be acquisitions. So you'll see, but I think the race to the top for the North American brand. I just saw an article that was talking about who's going to take it really outside of the U.S. There's some operators in Canada, kind of in Northwest over here, and BC and Saskatchewan, and I would like to take it Alaska to Arizona and be a North American brand, but that takes coverage and capital. So um, we'll see. But that's a long-winded answer to your question. Is we'll see.
So I want to take that a little bit further.
Yeah,
I think it's a fitting way to probably wrap this up. Is
let's do it.
you've uh, mentioned a capital raise going on, so I would imagine we have some people listening or reading that want to learn more about that, and we certainly want to give them that opportunity. So, give us a quick, like, 2-minute overview of what you got going, in the hopper right now, and how can people get a hold of you to learn more about that.
Yeah, thanks, man. I'll give them my spiel. We got a 20% equity placement for the right partner. We let 1.5% of that go to kind of set the value earlier this spring. But we're looking for the right partner that brings in either a branding avenue, kind of a guest marketing avenue as far as loyalty base, or even a depreciation and mobile hotel inventory. Like there's a lot of different angles that the partner would have to bring in a strategic competitive advantage. So we may have that lined out here by the end of the year. It's kind of we'll see on a few players that we're talking to. And then, in the meantime, we've raised this debt fund, which is really private credit. Big buzzword, obviously, but it's a really cool fund concept where we're just paying out 10% quarterly returns. But the fund, which typically is going to be replacing, prior partners that we would have raised after at maybe the holdings co level, will have up to 10%. So the fund will have up to 10% equity in each deal that it finances, as well as its fixed 10% return that it pays investors. So that's kind of a really cool way for, it's only a $50,000 entry point too. So that's kind of a cool way for people to be involved in the future growth of Jet. They also, both of these investments carry a passport levels too. So you're basically buying into a vacation club and getting returns. So really cool dual pronged approach between the debt side and the equity side. And my thesis is basically, like I said, 4 million of that can grow us another 15 locations. So that's how we get to 25. It's a huge growth jump for us, but then that's how you have the brand and kind of the opportunities of being nationally recognized are reachable then in kind of a 3-year plan. So certainly going to be exciting times ahead for us, and we've got the people to do it. So thank you for the opportunity to kind of explain that.
Yeah, absolutely. And what's the best way for people to get in touch to learn more about all this?
They got to come banging on your door first. No, they can get a hold of me. You can give them my email. It's just Jesse at Jet Hospitality. Check out our offerings and stuff online. We do a really good job of being transparent in what we're doing when we're doing it, kind of by quarter. So everything's online for us, and even the attorneys. You got to have attorneys when you're doing this stuff. And so I've learned that
Yeah.
we've got some good ones. So
Nice.
yeah.
Love it.
So thank you guys. Any last words of wisdom, or what? Where do you take this then? It's kind of to wrap up. You got kind of a ritual.
I think that's kind of it. The shameless plug and how does everybody reach you? So
I was going to say,
Appreciate it,
Jesse,
yeah.
honestly, as you are talking locations here, Matt and I are in not so warm climates coming up. It's November, and it always going to get cold quick. The only thing I'm thinking about is making my way out to one of your great properties and
Hey man,
warming up a little bit and getting outside.
yeah, absolutely, man. Will you let me know? We'll be happy to host you. And our most southernmost is Utah, Escalante, but man, it's cold even out there until about March. So I don't know. You don't
I'm
want to
sure
break.
there's great skiing, great fishing, great outdoor activities. It's I'm a sucker for that stuff, and I know Matt is as well.
Let me get Matt. He's got my info, but I want to get maybe I get you guys a passport. You've got like some 10 days just coming around if you want to get out west, whether it's Tetons or up in Washington. But it's kind of cool. I'll just send you a copy of it, and you probably, if you don't use it and you're cold, you could just use it for fodder, for fire someday, fire starter. Uh, anyway, yeah,
I love it. Well,
we'd love
Jesse,
to get
thank you.
Yeah.
We would love that. Thank you again for just taking the time with us today. You guys have a really fascinating, unique story. One of the coolest players in outdoor hospitality. I know you and Matt got connected when we wrote about you in the newsletter as one of the top players to watch, and I think you've only continued to grow on that legacy. So
Yeah, almost a year ago now. It's crazy.
That's crazy. Yeah,
we're excited to see where you take it.
Yeah, well, I'm gonna be here. I'm still standing. So thank you, Alex and Matt, for having me, and really enjoyed this experience with you guys.
Likewise,
Absolutely.
Jesse.
Thanks, Jesse.
All right, take it easy, guys.